Hello, my dear students. A very warm welcome to all of you in Shri Jaindra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 4, that is Inventories, and we'll continue with the practical questions. Let us continue. This is lecture number 11, and we are continuing with the practical questions. Question number 4. Physical verification. Physical verification of stock in a business was made on 23rd June 2016. The value of stock was 48 lakhs on that day. The following transaction took place between 23rd June to 30th June. Point number 1. Out of the goods sent on consignment, goods at cost worth 2,40,000 were unsold. Okay. Point number 2. Purchases of 4 lakhs were made, out of which goods worth 1,60,000 were delivered on 5th July. So we had made purchases, but the goods actually delivered on 5th July. Point number 3. Sales were rupee 13,60,000, which include goods worth 3,20,000 sent on approval basis. Half of these goods were returned before 30th June 2016, but no information is available regarding the remaining goods. So before 30th June 2016, half of the goods, that is 13,60,000 multiplied by 1 by 2. Point number 4. Goods are sold at cost plus 25%. So cost 100, profit 25%, selling price 125. If I talk about sales, 25 upon 125, which is 1 by 5, 20% on sales. That means 20% on sales. So 25% on cost equals 20% on sales. However, goods costing 2,40,000 had been sold for 1,20,000. Determine the value of closing stock on 30th June 2016. The value of closing stock on 30th June 2016. I hope you understood the question. So in this question, the physical verification of stock is done on 23rd of June 2016. On the physical verification date, the value of stock were 48 lakhs. Now there are 4 transactions given over here. We need to make the adjustments and we need to find out the value of stock on 31st June 2016. Let us continue. Question 4. Make a statement showing the valuation of stock as on 30th June 2016. Draw this format. Particulars, internal column, final amount, Value of stock as on 23rd June 2016. Value of stock 3rd June 2016, 48 lakhs. 48 lakhs. Add, add, right? Read point number 1. Out of goods sent on consignment, goods worth 2,40,000 were unsold. These are the unsold goods. Unsold stock. Out of the goods sent on consignment. So this would be a part of the closing stock because it is still unsold. 2,40,000. We had taken the stock on. We had taken the stock on 23rd June 2016, and we have to determine the value of stock on 30th June 2016. So whatever purchases we have made from 23rd June to 30th June 2016 should be included in the closing stock. Just read point number 2. Purchases of 4 lakhs were made, out of which 1,60,000 were delivered on 5th July 2016. So we had made purchases of 4 lakh, but out of which goods worth 1,60,000 were delivered on 5th July 2016. But before 30th June 2016, the goods of 2,40,000 has been delivered. That is 4 lakh minus 1,60,000, that should be included in the purchases on the closing stock. Just write over here, add purchases during the period from 23rd June 2016 to 30th June 2016 4 lakh minus 1,60,000 equals 2,40,000 equals 2,40,000. I think it is clear. It is clear to all of you. Let us see point number 3 now. Sales were 13 lakh 60,000, which included goods of 3 lakh 20,000 sent on approval. Half of these goods were returned before 30th June, but no information is available regarding the remaining goods. Okay, so before we do this point, just write over here, add goods in transit on 30th June 2016, 1,60,000, that is goods in transit. Let us continue. Point number 3. Sales were 13,60,000, which include goods of 3,20,000 sent on approval. Half of these goods were returned on 30th June. So from 3,20,000, this was the goods on approval basis, half is returned. That means 1,60,000 is returned. But this is about sales. We need to calculate the cost. So 25% on cost is 20% on sales. So from this 1,60,000, that is 50% of this, or half of 3,20,000, we need to calculate 80% of it, that is cost of goods sent on approval basis. Right over here, add cost of goods sent on approval basis 1,60,000 multiplied by 80%. So this is on sales, we are calculating on cost. 1,28,000. 1,28,000. I believe it is clear till here. Let us write a working note. Let us write a working note over here. Working note. Calculation of normal sales. Calculation of normal sales. Actual sales. Actual sales 13,60,000, which is given in the question. Point number 3, 13,60,000 is the actual sales, out of which 3,20,000 is the return. 3,20,000 50%, that is 1,60,000 is on the return or approval basis. So just write less return of goods sent on approval basis. The return amount 1,20,000. The return amount 1,60,000. 1,60,000 less. Read the last point. Goods are sold at cost plus 25%. However, goods costing 2,40,000 has been sold for 1,20,000. Abnormal sales 1,20,000 less abnormal sales minus 1,20,000. 13,60,000 minus 1,60,000 minus 1,20,000 equals calculate fast. 10,80,000. This is 10,80,000. Right, calculation of gross profit. So this 10,80,000 is amount of normal sales. 10,80,000, and we need to calculate gross profit, which is 20% on sales. Gross profit on normal sales 10,80,000, 20%, 2,16,000. 2,16,000 less loss on sale of abnormal goods, loss on sale of abnormal goods, 2,40,000. We have sold for 1,20,000. So loss is 1,20,000. Loss is 1,20,000. So gross profit is 2,16,000. But from this profit, this is the loss. So the net profit, the net gross profit is, the real gross profit is 96,000. 96,000. I believe it is clear. 96,000. Let us come to the original question. Value of stock, just make a total of it, add. 2,40,000 plus 2,40,000 plus 1,60,000 plus 1,28,000 equals 7,68,000. Make a total of 48 lakhs plus 7,68,000. 55,68,000. 55,68,000. Deduct less cost of sales, cost of sales during the period, cost of sales during the period from cost of sales during the period from 23rd June 2016 to 30th June 2016. The sales amount is 13,60,000. Actual sale is 13,60,000. Out of that, the return or approval basis is 1,60,000. Okay. So 13,60,000, just write over here, 13,60,000. Stretch these lines. We need to calculate cost of sales. So we will write the sales figure and we will deduct the gross profit out of it. The total sale is 13,60,000. Out of the total sales, the 1,60,000 is on approval basis, abnormal. We have deducted it. So 12 lakhs less gross profit, less gross profit. Gross profit we have calculated in working note 2, 96,000. 12 lakh minus 96,000, 11 lakh 4,000, 55 lakh 68,000 minus 11 lakh 4,000, 44 lakh 64,000, 44 lakh 64,000. Right over here, value of stock as on 30th June 2016 equals to 44 lakh 64,000. 44 lakh 64,000. I hope it is clear to all of you. We have done practical question number 4. We have done practical question number 4. And now we are shifting to practical question number 5. Now we are shifting to practical question number 5. Question 5. Let us read the question first. Question 5. From the following information, ascertain the value of stock as on 31st March 2016 and also the profit for the year. From the following information, ascertain the value of stock as on 31st March 2016 and also the profit for the year. Profit for the year means net profit. Profit for the year means net profit for the year. So it is not talking about the gross profit, it's talking about the net profit for the year. The value of stock is given over here. That is, on 1st of April 2015, the value of stock is 1,42,500. Purchases is 7,62,500. Manufacturing expenses is given over here, which is 1,50,000. Selling expenses will be given over here, which is 60,500. It's a part of income statement. Admin expenses is given over here, which is 30,000. Financial charges and admin expenses, these are part of income statement, 21,000. The value of sales is given over here, which is 12,45,000. At the time of valuation of stock as on 31st March 2015, a sum of 17,500 is written off. So a sum of 70,500 is written off on a particular item which was originally purchased for 50,000. So original purchase was 50,000. The written down value is 50,000 minus 17,500. So 50,000 minus 17,500 and sold during the year is 45,000, and that product which was having written down value of 32,500 sold for 45,000. Bearing the transaction relating to this, the gross profit earned during the year. Okay, so let us calculate this. Question number 5. Make a statement of valuation of stock. Statement of valuation of stock as on 31st March 2016. Kindly make the format of the statement. Particulars amount, particulars amount, final amount column, internal amount column. Value of stock as on 31st March. Value of stock as on 31st March 2015 is given in the question. That is 1,42,500. 1,42,500. Just see the question over here. At the time of valuation of stock on 31st March 2015, a sum of 17,500 is written off on a particular item which was originally purchased for 50,000. That means the value of this abnormal stock is 32,500. 50,000 minus 17,500, and this needs to be deducted from the value of stock because this is in abnormal nature. So right over here, less book value of abnormal stock. Book value of abnormal stock 50,000 minus 17,500. So this is 32,500. So the value of normal stock is 1,10,000. 1,10,000. We had made up purchases of 7,62,500. Add the value of purchases to it. Add purchases. Add purchases. 7,62,500. We have added the value of purchases. The next point is manufacturing expenses. The next point is manufacturing expenses. 1,50,000. Add manufacturing expenses. Add manufacturing expenses. Add manufacturing expenses. 1,50,000. 1,50,000. Just add these three figures: 1,10,000 plus 1,62,500 plus 1,50,000 equals 10,22,500. 10,22,500. We need to deduct cost of sales from the value of stock. Right, less cost of sales. Less cost of sales. We don't have cost of sales with us, so we need to calculate the cost of sales first. Cost of sales need to be calculated. Sales minus GP, that is gross profit. So sales as per book, that is book value. Sales, just go to the question. Over here it is given 12,45,000. 12,45,000. 12,45,000, the value of sales. Over here, there was an abnormal item of 32,500 book value, and we had sold it for 45,000. So abnormal sales is 45,000. That needs to be deducted from the sales. Right, less sales of abnormal item. Sales of abnormal item. What is the sale value? 45,000. So we have deducted, and the normal item sales is 12 lakhs. The value of sales of normal items is 12 lakhs. Less gross profit out of it, less gross profit. Sales minus gross profit equal to cost of sales. Gross profit. Gross profit. Just write over here, gross profit earned during the year is 20%, 20% on sales, 20% on sales. So over here, the gross profit would be 20% on sales. So 20% of 12 lakhs, that is 2,40,000. This needs to be deducted. So 12 lakh minus 2,40,000, 9,60,000. This is 9,60,000. 10,22,500 plus 9,60,000 equals 10,22,500 less cost of sales, that is 9,60,000. 62,000. 62,000. 500. 62,500. 62,500. You can write over here value of stock as on 31st March 2016 as on 31st March 2016 is 62,500. 62,500. I believe it is clear. It is clear to all of you. Let us move ahead now and make another statement showing net profit. Statement showing profit for the year. Statement showing profit for the year ended 31st March 2016. 31st March 2016. Make the format of the statement. Draw the format of the statement. Particulars, rupees, final amount column. We'll begin with the gross profit. So gross profit on normal sales. Gross profit on normal sales 2,40,000. That is 12 lakhs multiplied by 20% on sales. So 2,40,000. Gross profit is 2,40,000. Add profit earned on abnormal items. Profit earned on abnormal items. Sales value 45,000. Sales value 45,000. See this transaction, the last one. 45,000 is the sales value. The book value was 50,000 minus 17,500, that is 32,500. So 32,500 is the value in the books, but we sold for 45,000. So we earned a profit on it. Book value on 31st March 2015. We need to deduct it. So less book value on 31st March 2015, 50,000 minus 17,500. 50,000 minus 17,500 equals 32,500. Equals 32,500. So 45,000 less 32,500. 12,500 is the profit made on abnormal item. 12,500 is the profit made on abnormal item. So 2,40,000 plus 12,500. 2,40,000 plus 12,500. 2,52,500. 2,52,500. Deduct the expenses. So deduct less overhead expenses. Less overhead expenses from this. Overhead expenses. Selling expenses 60,500. Selling expenses 60,500. Selling expenses. Selling expenses 60,500. Administrative expenses 30,000. Administrative expenses 30,000. Administrative expenses 30,000. Admin expenses is 30,000. There is a finance charges also listed over here, that is 21,500. Finance charges 21,500. Just write over here. Finance charges. Finance charges 21,500. Add these three figures, 60,500 plus 30,000 plus 21,500. Total is 1,12,000. 1,12,000. 2,52,500 plus 1,12,000 is 1,40,500. Is 1,40,500. So this is the net profit. This is the net profit for the year. Just write over here net profit. Net profit for the year. Net profit for the year. Try to understand the question once again. Statement of valuation of stock as on 31st March 2016. What we did here is, we listed the stock as on 31st March 2016. The previous year stock is given in the question. Now, we have a abnormal sales, that is, the value was 50,000, but the 17,500 is written off. That means the book value is 32,500. The book value is 32,500. We had deducted it, the value of abnormal stock. Then we added the value of purchases during the year. The manufacturing expenses should be added over here in the valuation of stock. So we had added the manufacturing expenses also. Then we calculated the cost of sales. The formula to calculate the cost of sales is normal sales minus gross profit. Normal sales minus gross profit. So sales during the year, the total sales was 12,45,000. Out of that, there was an abnormal item was 45,000. There was an abnormal sales of 45,000 given in the last para, 45,000. Now we deducted the abnormal sales. That means the normal sales is 12 lakh. The normal sale is 12 lakh and the gross profit is 20% on normal sales. Over here it is given is 20% on sales. So 12 lakhs multiplied by 20%, which is 2,40,000. So we had deducted from sales the gross profit and we reached what? Cost of sales. Now we need to calculate the actual value of corrected stock or value of stock as on 31st March 2016. So from the value of adjusted stock, we had deducted cost of sales, and what we received is the value of closing stock as on 31st March 2016, 62,500. 62,500. On the same lines, we had made the statement showing profit for the year ended 31st March 2016. What we did exactly in this question, we had written the gross profit on normal sales that we had calculated in the previous part, that is 2,40,000. 12 lakh multiplied by 20%, that is 2,40,000. From this gross profit, we will add the profit earned on abnormal items. That is, there was an item in the stock of 50,000 with which is written down to 17,500. So the book value is 32,500. This 32,500 book value of product is sold for 45,000. Sold for 45,000. So the profit is 12,500. This abnormal profit will be added in the normal sales profit. So 2,40,000 plus 12,500, which is 252,500. We will be deducting the overall overhead expenses. In the question, there was three overhead expenses listed: selling expenses, admin expenses, and finance expenses. So all the three expenses, selling, admin, and finance expenses, needs to be deducted. So this 60,500, 30,000, and 21,500 calculated together, which is 1,12,000, and then we have deducted from it, that is 2,52,500 minus 112,000, that is 1,12,000, and we received the figure of net profit for the year, that is 1,40,500. 1,40,500. Okay, I believe you must have understood till here. We are stopping here. We are stopping here.